there's a tax strategy that you can do by yourself using your own personal property. And it doesn't require you to have rental properties or Airbnbs or stuff like that. Most great tax strategies do, but this one tax rule is different. What the rule I'm talking about is the Augusta Rule. The Augusta Rule says that you can rent your property out, your personal residence, for 14 days, and you don't have to report any of the income. That's pretty cool. So, but there are a couple stipulations. One, you can't rent it out for more than 14 days. Okay. Also, you're not able to write off any of the expenses. A good example that I like to always bring up is a example I heard about a pumpkin farmer. They are just an ordinary pumpkin farm land, and they, obviously it's their house and they make their money by selling pumpkins, but that doesn't really matter. What matters is it's their primary residence. Well, they got called by a movie company wanting to shoot some sort of movie scene inside of a pumpkin patch. So they call them up, say, hey, we need to rent this out for 14 days. Well, they rented it out. Well, I think it was like 10 days, but they rented it out and they brought so much money. There's no cap to this. That's the big thing too to understand is you can get paid however much money. It does not have a cap to it for those 14 days for someone to stay in. So if you have, a big mansion, you could charge a lot of money for, big groups of people to stay there or something. But that's just a small example, that you people can do. A lot of people that live like close to sporting events, like NFL stadiums or something, they can rent their property out for, a short periods of time for games, as long as they don't go over that 14 days. If they do that, then none of the income is taxable. None of it needs to be reported. It's all just free income. And that's a really cool rule. If you're going on vacation and you live, close to a good like destination spot where, like the beach or the mountains or something, and you're going on vacation somewhere, you can rent it out while you're gone. Obviously take some steps to cover or grab stuff that's personal out of there, but it's very okay to do that. Another cool thing to do is if you own a business, you can have your board meetings or meetings of some sorts at your property and rent your property out using the business. So think about that. You're pretty much sending money from your business that you own to you tax free. Isn't that crazy? Because obviously you can distribute it to you, but that's a taxable event. Obviously you can get payroll where you're paying yourself an hourly wage or something. That's a taxable event. But if you rent your property out to your business for business meetings, obviously do it correct. Have an itinerary, have, people come to your house and stay there, for these events, then you'll be able to actually write it off legitimately. And then you won't have to take any of that income as actual income. It's just transferring to you tax free. That's really cool, right? The Augusta Rule is really something you should not sleep on. It definitely is a cool thing to think about. Obviously you do have to rent your property out. And if you have people that you don't know coming in, there's a downside because there may break something. And then if they break something, you can't really expense any of it because you're taking advantage of this Augusta Rule. None of the expenses are deductible because the property that you're in is your personal property. It's not a business property. So there's no expenses. So it's just something cool to think about. Definitely want to try to take advantage of it if you can, especially if you live close to big sporting events or something. But thanks for watching. Like and subscribe.